This is merely what Ibu considers to be the second inning of a 9-inning game for Tesla. And in the end, I believe that demand is beginning to stabilize, particularly in China and the United States. In addition to his role as managing director and senior equity research analyst covering the technology sector at Wedbush Security since 2018, Daniel is renowned for his insightful analysis as a Tesla bull. The stock knee-jerk took a hit, but they aren't going to give up. In the end, I believe 95 to 98 price cuts are in the past, and you can now start to see that amount in the parts store, from superchargers to AI/Ives views Tesla's recent exceptional delivery figures as the beginning of a remarkable electric vehicle triumph that is gradually gaining recognition on Wall Street prices. FSD mentions the OEM they are in discussions with regarding battery technology, and stock is still rising in spite of this knee-jerk reaction. It has clearly been a parabolic year when compared to the competitors. With his unwavering backing, Ives presents Tesla as a strategic chess player, while other electric car makers are only playing checkers. Ives has continuously expressed his optimism in Tesla, displaying unshakable faith in the company's capacity to maintain its upward trajectory of development despite persistently unfulfilled expectations about fully autonomous vehicles and consistently declining profits. Tesla had a fantastic year, especially considering the significant fluctuations in the company's stock price in 2022. However, Dan, you were obviously already optimistic about Tesla and raised your price target from $300 to $350. What in particular caught your attention during the earnings call, or this earnings report that you believe deserves a 50 price raise? Indeed, I believe that in the end, everything they're doing with regard to electric vehicles has truly made them the Otani of the industry, since from a valuation standpoint, some of the parts are now being delivered rather than just being demanded by an auto. I think this is how you get to a trillion, $2 trillion amount when you start adding what battery technology could be, what superchargers could add, and eventually the drum roll. Take note of its FSDI. It is no secret that Tesla investors have had a wild ride over the last few years. After rising to a new all-time high in late 2021, the stock crashed by more than 70. Huh. Excessive inflation was one of the factors contributing to some of the steep dips. Tesla's stock is rising in 2023, up 90 so far this year, despite a significant stock market slump that was primarily concentrated on tech growth stocks and rising interest rates to combat inflation. This year's general stock market rebound and a more upbeat sentiment on Wall Street were undoubtedly contributing factors. Several company-specific developments have thrust the electric vehicle maker back into the spotlight. The biggest of these is the mad dash by a growing number of automakers to join the Tesla supercharger network and adopt its North American charging standard NACS connector, which is quickly becoming the de facto industry standard. Simply put, Tesla has been making waves throughout 2023, particularly over a series of game-changing announcements of partnerships with a handful of competitors that would grant other automakers access to Tesla's supercharging network. These partnerships, amid the regular growth of the charging network, represent a component of the EV makers business that Wedbush analyst and Ives thinks has a lot of room to grow. Historically speaking, automakers have been fiercely competitive when it comes to EV charging, with most players insisting on developing their own proprietary systems in recent months. However, a long line of rival automakers have thrown in the towel and agreed to join Tesla's supercharger network in May. Ford Motor Company became the first car maker to defy tradition. General Motors soon followed, and a number of other manufacturers like Volvo, Polestar, Mercedes-Benz, and Nissan embraced the trend fast. Wall Street is frantically updating its analytical models and Wedbush as a result of this genuine stampede. Here's why I've dubbed Tesla a golden EV success story. Seasoned technology analyst Dan Ives stated he thinks this trend will eventually bring tens of billions of dollars in additional revenue to Tesla's performance. He emphasized how Tesla's supercharger network is becoming more and more popular and mentioned that other major OEMs like Hyundai, Honda, and Acura should follow suit. Additionally, Tesla is attempting to obtain its portion of the $7.5 billion in government subsidies in the United States intended to hasten the installation of up to 500 zero high-speed chargers on the busiest roadways in the nation. The Biden administration has made it clear that Tesla would only be qualified if other automakers were given access to its network. Significant money has been spent on the Tesla supercharger network, with each charging station costing a whopping $42,000. Putting aside the associated financial burden, according to a Bloomberg analysis, Tesla stations are far more cost effective than the $100,000 to $250,000 that rivals spend each connector. Ives points out that Tesla committed earlier this year to more than double its present capacity of about 5,000 superchargers by 2024. That is 7,500 superchargers added to the network. He asserts that its expansion will be accelerated by the growing number of agreements with other automakers as a result of the nearly entirely solar-powered network, which eliminates the need for energy generation. Tesla's supercharger network will present a significant opportunity for monetization and account for 3 to 6% of total revenues, translating to a $10 billion to $20 billion business by 2030, according to Ives. This suggests that Tesla could generate more than $333 billion in total revenue by the end of the decade across its expansive business, a significant increase from the $94 billion it reported over the previous 12-month period. To delve deeper into the sum of the parts valuation, we modeled and projected out Tesla's supercharger network. As I mentioned in a previous piece, we predict that by 2030, Tesla's supercharger business would account for 3 to 6% of the company's total sales, or between $10 and $20 billion. Ives was previously optimistic about the corporation increasing his pay. Aim for 50 to 350 by July. For now, Tesla is their world and everyone else is just paying their rent. Ives told CNBC that in terms of scale and what's visible in batteries, this is what, in my opinion, Apple 2008, 2009 looked like in relation to the larger Tesla narrative. Ives' most recent forecast from Wedbush is predicated on a company that is presently running. ARK Investment, on the other hand, claimed in April that by 2030, Tesla's robotic taxi company might generate up to $10 trillion in revenue. At the time, ARK stated that it anticipated Tesla to trade at $2,000 per share by 2027. Although analysts and Tesla bears cannot seem to agree that Tesla should trade like a technology stock rather than a traditional automaker. Eric is bullish on Tesla as an AI company. Its big vertical is the aforementioned autonomous taxi business, which ARK believes could generate up to $10 trillion in revenue by 2030. As per the April publication of ARK's latest research, it is anticipated that Tesla would achieve a share price of $2,000 by 2027 that is predicated on a weighted probability of various revenue, profitability, and stock valuation outcomes. Yet, even in the worst case scenario for ARK, the company estimates that the shares might be valued at $1,400. These presumptions eventually stem from Tesla's dominance in data and artificial intelligence. ARK anticipates that majority of Tesla's earnings will come from the robotic taxi industry by 2027 as a result of the company's efforts to develop self-driving technology that outperforms human drivers. Based on ARK's study, Tesla has the potential to earn over $1 trillion in revenue by 2027, with 47 coming from electric vehicles and 40 from robotaxis. Energy Solutions would supply the remaining amount. Insurance and ride-hailing services operated by humans. Dan Ives of Wedbush believes that Tesla is more of a digital behemoth than an automaker, and he recently estimated that the company's supercharger network could generate up to $20 billion in income annually by 2030. Bulls have disruptive technology, and there is still a lot of controversy about the term. I've stated that I've always seen them as a tech play, and I can contend that looking ahead, the FSD perspective makes them one of the best AI plays. Due to the increase in Tesla stock price over a period of 3 to 5 years, it is no secret that Tesla stock can be extremely volatile, but experts always point out that it is more suited for long-term investors rather than short-term ones. Make sure to subscribe for more. With a commensurate increase in valuation thus far this year, Tesla is still the dominant EV supplier in the US and is expanding on numerous fronts, including its supercharger network, battery production, energy solutions, and vehicle manufacturing. For those with an extended investing time horizon and the stomach for some volatility, there's still plenty of growth to be had.